What's up, outliers? Quick update video before our YouTube live stream today at 5 p.m. Pacific time in a couple hours. Want to walk through the markets at a high level. It'll be a quick video because not a lot happened today. There's a couple small things that I want to point out. I want to take a stroll through GME specifically as per usual, keeping that on the cadence. A lot of people are interested in staying up to date on the options chain there, so we'll do that. And yeah, should be a pretty simple one here. Now, I got to say hello from the other side because now I'm on this side of the screen per the recommendation of one of our Discord members, which was probably the simplest recommendation on planet Earth that makes such a tremendous amount of sense so that I'm now not in the way of things. So you guys will have to find something else to not be happy about in the videos. So, I mean, we'll see what you guys come up with. There's always something, I suppose. So what do we want to talk about? The main thing is this. S&P 500 and the Qs did nothing today. It was a completely flat, boring day with these tiny little baby candles that just are not moving much. IWM, however, continued to diverge. This is important. The reason why it's important is take a look at where SPY landed, take a look at where Qs landed, and then take a look at where IWM landed. IWM is now essentially at the close that it saw on the 6th. The other two indices are still above. They're still rallying, although they've contracted a bit. This is important. The other thing is the S&P 500 as an index with the percentage of stocks above, this is using their 50-day moving average, is cratered, even though this didn't move quite that much. So I interpret most of this as under the top level rotation, and small caps are still seeing the brunt of it. The other thing I notice is take a look at the sale volume today in IWM as compared to sale volume in SPY and Qs. You can see kind of how much of that candle, or I guess the bar down here, is consumed in red. And in this case, it's the majority. So if we take a look at IWM quickly, specifically, we can see the exact number, which was 75% sale volume. So heavy sale volume today, hovering right around this point of control. This is an important level for me. This is also why I do not have any sort of long position right now in small caps, even though I do still find them interesting. And I think that there's still opportunity for them. But I think as it sits right now, it's just not great. And I need to see what it's going to do. Now, one other admin note is variance risk premium plays are still coming in literally beautifully. And I noticed that because we can see it even here in the Russell, where variance risk premiums have just spiked essentially from the 9th to the 12th. This is just expanding very meaningfully. And this is the short-term VRP is moving quite a lot. So I'm still trading zeros. I'm still using SPX myself, but another great opportunity here inside IWM. Now, as far as SPX, I'm running a couple positions in here. I got filled on some box spreads. I can tell you what it was. It's the 30 AUG 5,000, 6,000 strikes for 997. So those are 1,000 point wide, and they have 18 days to expiration. Right now, the percent annual yield for the duration of that trade is 6.081%. With fees included, it's like plus 0.71% over the current risk-free rate for the same time frame. So just a way to put money to work while I am keeping an eye on things. This is there's a really cool tool that, well, it's kind of simple. Let's not church it up, Eric. It's a very basic Excel sheet, but I like it. It's cool. And you can access it if you want. There's a video that I did. If you literally just type in box spreads, you'll probably see it pop up because not a lot of people are talking about that stuff. It's kind of boring, but it's a big part of what I do with capital that's otherwise sitting on the sidelines. Because in this case, my money is going to earn, again, 6.081% annualized return. That's not the total return on the trade as it goes out. That's really important to note. That's annualized. The return on invested capital will be much lower than that, but it's doing something in the time frame that we're working. Because right now, the current risk-free rate is for a 1 month is 5.37. So, and it tailors down from there. 2 months is 5,295 and so on and so forth. So rates are chilling out a little bit. There are still some kinks in the structure. So 3-year is at 3843, 5-year is at 3758, and then 7-year is at 3805. So 5 is depressed compared to the 3 and the 7. You can trade those kinds of relationships too, but kind of a boring trade, not what I'm looking at right now myself. Okay, so that's that. Now let's pivot over to GME. GME. It sounded like GAME. Didn't mean that. It meant GME. And I mean, you literally can't even see the volume, which is unfortunate. It's just so light volume. We're really just not seeing much happening here. So the percent buy volume for today was 52 versus 48% on the sales side. Total volume was 4.4 million against 10.4 million. So just anemic volume. Now, one admin note is I know a lot of people talk about the dark pool volume and how you don't really get to see the actual volume. There's just an important difference between dark pool ATS transactions versus transactions that are internalized. They're kind of different things. So with dark pool orders, they still will hit the consolidated tape. It's just delayed. If it's internalized, that will not hit the tape. You're not going to see that. So if there's heavy internalization of orders, you're not going to see any of the follow through. And that's one of the problems with GameStop. And I actually don't know to what degree the orders are being internalized. And if anybody has good research on that, I genuinely would love to be able to take a look at it. If you have access to it, let me know so that I can take a peek, throw it in the comments below, because I'm very interested in that question. Because we know that for GameStop, the off-exchange volume is massive. However, if we take a look at the off-exchange volume today, it was 47.64%. And the 30-day average is 52, so a little bit lighter than that. Now, again, the problem with this is we don't actually know of this off-exchange volume, how much of it is internalized versus not. In this case, obviously, I would assume not internalized because we have a number. But this then doesn't help us understand what the total volume is that's been internalized. So yeah, I would be interested in exploring that problem set a little bit more and learning more about it myself, because I do find that to be an interesting potential problem when we're looking at the reporting in something like GameStop. Now, let's take a quick look over at the options chain, and there's a few things I want to highlight. First off, volume very light, less than 100,000 calls against 21,000 puts. Now, it is, again, good to see such a disparity between calls and puts. Most of it is centralized in this expiration cycle. So we are still seeing a ton of volume in this front expiration cycle. So as we take a closer look at the existing open interest, it's 669.9 to 337. So again, this is also good that the calls are being built out more and more. And we are seeing some of these other expiration cycles being built out alongside of it. However, the majority of what I'm seeing so far indicates kind of a quiet week, 2 weeks ahead from an options perspective. That doesn't mean that the stock can't pop off as soon as there's a catalyst. That's what makes it special and do what it does. But there's just not a lot of positioning expecting that as compared to what I saw when I originally got into GameStop towards the end of April, early May. So we can still see a bunch of net adds coming in. So people are still building into these positions, which is not super surprising. And these 50s are getting hit pretty heavy. So there's 18,694 with 6,000 added over the last trading day, another 1,600 traded today. But you can see that there's just a lot of volume on these near the money options. And again, this goes back into, this is a tough way to make money. And these are swimming upstream because they need a big move very quick in order for them to really show a profit. Now, these have a little bit more of a padding because theta decay on these is like 10 cents, 9 cents against something that's 64, 65 cents total, or maybe, 45 cents for these 22 and a halves. That's still a massive percentage of the remaining premium that's bleeding out from theta decay, which is kind of problematic. You really need to move quick in order for this to make sense. What I see also of interest is vol has collapsed essentially across the entire options chain. We only see slightly elevated vol in 13 and 20 SEP expiration cycles. And it has earnings on 4 SEP, which is really important to me because I would expect this expiration cycle, the 6 SEP expiration cycle, to be much higher than it is relative to 13 and 20. The fact that 13 and 20 are higher than 6 and 6 is the expiration cycle that includes the release, at least as it's scheduled right now here, 4th before the market, is fascinating to me. That is an anomaly. That's not normal. You do not see that frequently, which again, can't help but find that interesting. Now, looking across, I didn't see anything jump out at me in terms of TNS, time and sales. There's a glorious mix of positions going out. There's a mix of expiration cycles from 16 AUG, 23 AUG, kind of, again, standard fare, but most of these are really small positions, right? So the 125s, 334 trade went out, but they're trading for 2 pennies. The bigger trades are kind of these that have a higher price. Sometimes I like sorting by them not to see a million NAs. That's actually kind of annoying. I don't even know why they put them in here, but it's to find these. These are the bigger trades. And you can see most of these are kind of deeper in the monies. And we still see those far out in time 125s getting pinged off a little bit. Can't help but find that interesting. Some of these still look like the other side of the trade that looked like originally sold these. So because there was a fairly large position over 1 million notional value that started hitting these. But yeah, most of the trades that are at any reasonable size are not at really high prices, what I'm trying to say there. So if I switch this minimum quantity being like a 25 lot, something, again, let's do 10 lot actually, because sometimes people I notice move blocks of 10 in here. And if we look at minimum 10, we're not seeing a bunch of these. Now, these, again, further out in time, people building longer term positions, which makes sense in here. But yeah, nothing jumping out at me today. So that's all I got for this one. As always, if there's anything you want me to take a look at, please send it to me. Love taking a look, doing my best to help you guys out and also learn alongside of you all. And then I'll see you on the YouTube live session later today. Be an outlier. See you guys later.